bad could it get in China? They're going to make up their GDP number anyway.
I've thought about this for a long time. I've gone from being apocalyptical on China to now thinking it's Japan all over again.
Really?
Yeah, and I think, you know, can they devalue their currency? Can it go to 8 or 9? Is that going to? That's a bad shock for the world. But do they lose control of the banking system? I know, you know, a good friend of both of us, Kyle Bass. You know, Kyle thinks that could happen. I think it can, but I have a feeling that it never happened in Japan. Somehow, countries are able to hold it together longer than we imagined.
Yep.
We never imagined Europe will hold together as long as it did, considering how bad it got in like 2010, 2012.
Yep.
And it's still, you know, yes, a bunch of Italian banks have gone, but it didn't take the entire Italian banking system down yet. It's not taken the entire German one down yet, or the Spanish one yet. And I think they're still going. But so it seems that you can paper over the cracks longer than people expect. So could it be really bad? Yes. Is that the highest probability outcome? No.
Yeah, it's hard to
but don't forget, rate of change means the Chinese are out of the global demand equation. Right, so that's gone. So there is no big pickup. There is no iron ore going to save Australia's recession coming. You know, the Australians are going to be stuck with their housing bubble and their massive household debt, looking at each other saying, well, who's going to buy our stuff? And the answer is nobody.
Yeah, our model is Quad 4 and Australia is red as any other country right now.
Yeah.
And that's another thing. I mean, if it really was going to be recovery in China, I'd see it in at least some lick of data or in a market signal. I see it in neither. Okay,
No.
so to me, that's what keeps me honest, is obviously the market's going to tell me when I'm wrong. And I just can't find it. I mean, you certainly can't find it in anything Australian.
No, the only thing is the currency backed off a bit, but the dollar backed off a bit for a while. Looks like the dollar's going to start strengthening again. We'll see. That's one of the few areas we've got slightly divergent views. You're in a topping process, and I'm still in a, I think there's another peak to come.
Well, this, as you know, I can go both ways on this, and I will. But so again, this is a major topic on the road, not only this week, but in Boston last week. To get the dollar right, you have to have your European view right. I mean, if I'm right on Europe and the recession broadens to France, and then again we get a broadening of European risks, then the euro is going down faster. That keeps the dollar up for longer. Yeah. So I wonder how many people. I literally, and I said this to you before we sat down here with the camera on. It shocks me how many institutional investors do not know that Italy's already in a recession. Yeah. And again, when the ECB acknowledged that this week, the dollar went straight up. Because what people have done is anesthetize themselves to Europe. They've gone from worrying, they went from overweight, like they'll recover, to then giving up and then ignoring it, which is what they did with Japan, if you remember. People just ignore Japan now. Yes. And then the macro guys come in. That's a great point. Once every 2 or 3 years, and they all buy Japan, and they make a bit of money, then it all sells off again, they give up. And that's all that happens. So they're anesthetized now. They don't care. So they're not even listening to Europe. So everybody's hyper-focused on the US. They kind of know Australia, there's probably not bad, too small, why do we care? China is right now, I think most people are in the slightly benign camp. It's like, could you get stimulus? Yes. Will that help us in the US? Probably. So they're keeping it on the marginal, slightly benign to positive. The US everybody looks at, and typically everyone just takes a snapshot of GDP now and the inflation and the unemployment numbers and the inflation numbers, which are all lagging, and say, well, it's fine. But if you look at the rest of the world really, in proper macro terms, Europe is getting worse, China's getting worse, Australia's getting worse, there's no real region of growth. You know, some of the markets, Brazil recovering, India's not doing a great deal. Who's going to save the world? The US cycle is rolling over and fast. Essentially, I guess that's why everyone's begging for more cowbell every morning, every meeting, everything I see on Twitter. You know, but cowbell is interesting because it works until it doesn't. And this is a thing that everybody forgets, that at every market top, the Fed cut rates, the market has this rally, like, oh, great, we're back in the game again. Not realizing that the Fed have cut rates because the economy's not good. Right. Or they go on pause first, then they cut. And then the market tends to have these spikes every time it happens until it's kind of like after about 3 cuts, the market goes, oh, I get it now, it's a recession. And everything goes to a correlation of 1 and falls to the floor. But every time people think that the first cuts, oh, well, this is bullish.
No, because Fed cuts take about 18 months before they start working into the system. So, you know, it amuses me, but we're doing exactly this now. This equity rally we've had is a very typical one.
Right.
A little bit larger than 2000 and 2001, and a little bit larger than 2007, where both those rallies are about 10 to 14%. I think we're just 15 or so % we've done this time.
It's and we'll get to some questions. You have a lot of questions here in a minute, but I just want to finish that thought on Europe because it's obviously been bothering me. Like I'm like, how could you not pay attention to one of the top 3 places in the world when you're trying to calculate certainly a multinational company's earnings outlook? I mean, how could you have a view on any multinational company's view without assuming that Europe is in a recession and the level of interest at the institutional client level is literally earmuffs?
Because if you had to admit the dirty truth, you wouldn't be as overweight risk as they are. It's true, right?
Yes.
You cannot,
Yes.
you cannot square away the fact that Deutsche Bank looks like it's going bust. The Germans are openly talking about merging it with another bankrupt bank. You've got the Italian banks that look like they're going bankrupt. You've got the Spanish banks going bankrupt. You cannot see those things and say, I need to be taking aggressive risk.
Right.
But that's the world we're in. So it's a justification is why they don't want to hear it. It's like, la, 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 I'm not listening.
Yes, it is. It really is. Guys, one more chart, slide 103, I think it is the European traffic decline. Now, this is not going away. And this is, you know, so as you know, I think this, I think we have that. There it is. So this is the rate of change, as I always do, of 35 to 54-year-olds, i.e. the people that have the money or the spending capacity in an economy. So when the Eurozone came to be, of course, there was a positive slope to that line, and it was a positive absolute number. Okay, that's great. We're all going to get along. Then it goes rate of change negative, then it goes absolutely negative, and now we're about to go into the depths of the worst Europe's ever seen. They don't have a millennial generation.
Nope.
They don't have an immigration generation. They don't have anything but people getting older faster, which is precisely Japan. And I guess that's why people just stopped caring about Japan. But it certainly doesn't mean that at this point of the leverage cycle or the economic cycle that it doesn't matter.
So if you think about what it means, because I lived in Spain for 10 years, and I saw this. I was there over the crisis and saw what happened afterwards. What happens is the definancialization of the economy. People don't care about equities any longer because they've retired. What they care about is how much money do I have in my pension, which is usually fixed income related, which is why all the bond yields are so low, because all the pension funds have piled into that and said, that's it, job done, you guys go retire.
Right. I don't want a return on my money, I just want you to return my money.
And what happens is they spend less because you don't know how long you're going to live for, so you tend to spend less, so consumption falls, GDP doesn't really recover, nor does industrial production, and things stay like that. Now, that doesn't mean it has to be apocalyptical. I mean, whenever you go to Japan, you see how actually it's an amazing country and it functions very well. It just functions at a lower rate of GDP growth. And it's a transfer of wealth out of the pockets of the retirees into the economy over time. That's basically what's happening. Because in Japan, they live so long that their kids have retired by the time they inherit the money, which is kind of a weird situation. So it flows through slowly, but it flows out of that generation into the economy. And in Europe, it's the same thing. So nobody cares because you don't have racy growth, you don't have racy stock markets, and bond yields will always be low until this whole generation, the demographic decline goes through. Meanwhile, Spain now is overtaking Japan as the longest living people in the world because you've got great healthcare systems, you've got great climate.
Really? Is that in the last couple of years? Or?
Yeah, it's not taken over yet, but the forecasts are that they will live longer than the Japanese.
Really? Didn't know that.
So that's the Spanish.
Wow.
And the French, the Greeks, the Italians, that are just right there. You know, the Mediterraneans are immortal. So you have an immortal group with not enough real savings who are going to live forever, so consumption is going to fall.
They're just chill. I mean, compared to an American who's watching CNBC, chill.
Yeah, I know. The American obsession.
What is my net wealth going to do today?
On a real-time basis. I know.
Well,
will I hit my number today?
Isn't that amazing? And that's there's a schizophrenic. There was almost a panic on Twitter in my community maybe 3 days ago. Like, this is it. The S&P's got to go back to the all-time highs. You know, I was getting chirped by the lowest quotient. I knew that something was coming. Implied vol was trading at a 50% discount to what had been realized in the S&P going back, which is pretty much the lowest number we've seen on Tuesday. And then whammo, 3 down days, and I hear crickets. So we're going to get some questions on that.